Hello, and welcome to our market alert video for today, which is June 16, 2023. I am Ken Moraif. I'm founder and CEO of Retirement Planners of America. Thank you for watching this video. It is designed for those of you who are over 50, who are retired or retiring soon. So hopefully that's you. And we're going to talk about today where we are with the Federal Reserve and how it affects where we go from here in terms of our investments and our strategy. So first of all, before we dive in, had a big moment happen in my life, and that is that, when you become a grandfather, as I did a little under 2 years ago, you kind of have to start thinking about what do you want your grandchild to call you? Do you go with all these names? And I come up with Papa, all right? And I'm just going to go with Papa. And so what I also was told was that you may pick a name, but your grandchild will pick a name for you, and that'll be your actual name. And that's exactly what happened. My grandson, Nathaniel, has decided that my grandfather name is Poppy. And so that's what I am. I'm Poppy. So you can call me Poppy from now on if you'd like. So let's talk about what happened this week. The Federal Reserve came out, and it was kind of interesting because they didn't quite, Jerome Powell, the Federal Reserve Chairman, seemed to not quite know how he wanted to say what they were doing. Okay, so he said, we're going to skip. Oh, actually, I shouldn't call it a skip. I should call it the decision that we've made is a good one. So then the big debate came out with all the talking heads. Is this a skip or is it a pause? We don't know. Maybe it's a pause. Maybe it's a skip. So I don't know what the difference. I guess the difference between a skip and a pause. A skip means you're going to skip this one and start up later. A pause, that could be indefinite, right? You pause and you stop forever. You don't have to ever play again. So skip is probably a better word, even though he said maybe I shouldn't say that. But then further in his speech, he spoke about how they probably would raise interest rates 2 more times before the year is over. So they're going to stop right now. They didn't raise interest rates this time, and they'll do it again maybe in July and into the future. So we'll see. But the important thing is that inflation has been coming down. As you guys know, if you've been watching this video, we said that inflation would be 4.1% or thereabouts. It was 4.9 last month, and that's where we said it would be. We were wrong. It was 4.0, so we missed it by 0.1%. Oops. But we did say that the Fed would raise interest rates 1 more time, and they didn't. So we were wrong about that. But be that as it may, we actually now have amended our fearless forecast on inflation in July. We've been saying that inflation would be under 4% in July. We now think it actually will be under 3.5%. So the Fed's target is 2%, and they're making headway. Now, the second half of this year is going to be more difficult to achieve, so we'll have more for you on that in the future. But what does this mean in terms of strategy and where we go from here? Well, we're mostly invested in our stocks right now. We're not fully invested in them, but we are still not in our bonds. And the reason why is because, as we've talked about in the past, generally speaking, when interest rates are rising, bond values are falling. And that's been the case this year. Bond values have fallen. And if the Fed is not done raising interest rates, then we think bonds are not a safe place yet. So we're still in the bond portion of our portfolio. We are still in cash in the money market fund for now, waiting for a better time. But because our forecast is positive for the second half of this year, we are mostly invested in our stock portfolio. Now, having said all of that, as we always say, growth is important, but protection of principal is even more important. We're not here to make you rich quick. We're here to keep you from becoming poor. Okay. And I think you know the difference between those two, right? And so that's why we have what we call an invest and protect strategy. It's the one that told us to sell in April of last year, and we didn't buy back in till this year. So we stayed out for most of last year. And people who didn't do that, I suspect, lost quite a bit of money during that time. And so we want to help you to achieve your second childhood without parental supervision. It's what we call your retirement. And we think that part of that is peace of mind and having a strategy that you have confidence in. And we want to build that for you if you let us. And our website is rpoa.com, and you can click on the link below this video as well. And if you go there, you can meet with one of our retirement planners. You can watch our videos, articles, podcasts. We have lots of information to help you to have the retirement that you want, to retire when you want to, and to stay retired if you're already there. That's our goal for you. So again, thanks for watching this video, and we will talk soon.